Based on the historical data and forecast, Bitcoin is exhibiting a downtrend. The price has consistently been approaching the support level of $76,700. The RSI has been fluctuating below 50, indicating a weakening upward momentum. The forecast for the next week predicts a continued downward trend, with prices dropping to $71,000. The Bollinger Bands are also widening, suggesting increased volatility and potential for further price declines. Therefore, I recommend a short position strategy. The entry price should be $78,900, placing a stop-loss order at $81,000 to limit potential losses. The initial target price should be $76,000, capitalizing on the anticipated downward movement. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, which occurred on January 31, 2026, it signals an oversold condition, potentially indicating a short-term bounce. However, given the overall downtrend, I would still maintain a short position. The second target price should be $73,300, based on the forecast data and the widening Bollinger Bands. This combined approach, leveraging both trend analysis and technical indicators, aims to maximize potential returns while managing risk effectively. The final target price should be $71,000, aligning with the lowest forecast price. Based on the historical data and forecast, Ethereum demonstrates a clear downtrend, particularly evident in the recent forecast prices, which consistently decline from $24.40 to $19.80. The RSI consistently stays below 50, indicating a prevailing bearish momentum. The Bollinger Bands also support this trend, with the price consistently nearing the lower band, suggesting further potential for decline. Therefore, I recommend a short selling strategy. Entry price should be $2,440, with a stop-loss placed at $2,550, just above the upper Bollinger Band. The initial target price is $2,210, aligning with the first forecast price. If the price continues to decline, a second target price of $2,010 can be considered. To refine this strategy, I suggest a layered approach. Upon reaching the $2,210 target, partially close the position and adjust the stop-loss to the entry price of $2,440 to protect profits and allow for potential price reversals. Continue holding the remaining position with the $2,010 target. This layered approach mitigates risk and maximizes potential returns by capitalizing on the predicted downtrend while incorporating risk management techniques. This portfolio combines the RSI, Bollinger Bands, and forecast data to create a robust short selling strategy. Based on the historical data and forecast, BNB shows a clear downtrend. The price has been consistently declining from January 20, 2026, to February 9, 2026, with the forecast indicating further drops. The RSI consistently falls below 50, reaching as low as 25.0, suggesting strong selling pressure and oversold conditions. Considering the support price of $756 and the forecast price of $784 on February 3, 2026, I recommend a short position. The entry price should be $784, with a stop-loss placed above the upper Bollinger Band at $861. A target price of $684, aligning with the forecast for February 9, 2026, should be set. This strategy leverages the downward trend and utilizes the RSI and Bollinger Bands to define risk parameters. To refine the strategy, I propose a portfolio combining the RSI, Bollinger Bands, and trend analysis. The primary strategy is shorting at $784 with a stop-loss at $861 and a target of $684. As an additional layer of risk management, consider a secondary strategy based on the RSI. If the RSI rises above $30 before reaching the target, close the position and reassess. This approach combines a strong trend-following strategy with a reactive RSI signal, optimizing for both potential gains and risk mitigation. This portfolio offers a balanced approach to capitalize on the current downtrend in BNB. Based on the historical data and forecast, XRP exhibits a downtrend. The RSI consistently falls below 50, with recent values nearing oversold territory below 30, indicating potential short-term bounces but overall bearish momentum. The Bollinger Bands show XRP trading near the lower band, reinforcing the downward trend. Considering these factors, I recommend a short selling strategy. We will enter a short position at $1.66. Given the support level at $1.58, we will set a stop loss at $1.75 to protect against a potential bounce. The initial target price will be $1.44, capitalizing on the expected downtrend. To refine the strategy, we will incorporate a trailing stop loss based on the Bollinger Bands. If the price reaches the middle band of $1.89, we will adjust the stop loss to $1.85. If the price continues to rise, approaching the upper band of $2.2, we will move the stop loss to $2.1. The final target price will be $1.45. This layered approach allows us to maximize profits while minimizing potential losses, adapting to market fluctuations. The portfolio will prioritize the short selling strategy due to the strong bearish signals. Based on the historical data and forecast, Solana has been in a downtrend recently, with a significant drop in price and an RSI consistently below 30, indicating an oversold condition. The forecast for the next week predicts further decline, potentially reaching the support level of $99.9. Considering the RSI and Bollinger Bands, a contrarian strategy focusing on short-term bounces could be profitable. I recommend a strategy where we enter a long position at $104, placing a stop loss at $99.9 to protect against further downside. The initial target price will be $117, aiming to capitalize on a potential short-term rebound. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band at $100, it suggests a potential bounce. We will enter a long position at $100, set a stop loss at $99.7, and target $104. This strategy is designed to capture quick profits from short-term volatility. Given the overall downtrend, a conservative approach with tight stop losses is crucial. Combining both strategies, the most efficient portfolio will be a long position at $100 with a stop loss at $99.7 and a target price of $104. Based on the historical data and forecast, TRON demonstrates a downtrend, with consistently declining prices and forecasts below the Bollinger Band center line. The RSI consistently remains below 50, indicating a bearish momentum. Considering the support price of $0.279 and the forecast for continued decline, I propose a short selling strategy. The entry price will be $0.284, coinciding with the beginning of the forecast period. The stop loss will be set at $0.283, just above the recent bottom of the Bollinger Bands, to limit potential losses if the price unexpectedly rises. The initial target price will be $0.278, aligning with the forecast for February 3, 2026. To maximize potential returns, I suggest a dynamic adjustment to the target price. If the price reaches $0.278, we will move the stop loss to the entry price of $0.284, securing the initial profit. Subsequently, we will adjust the target price to $0.276, based on the forecast for February 5, 2026. If the price continues to fall, we will further adjust the target price to $0.27. This strategy combines RSI and Bollinger Band signals with forecast data to manage risk and capture potential profits in a declining market. Based on the historical data and forecast, Dogecoin shows a downtrend, with the price consistently below the moving average and the forecast predicting further decline. The RSI is mostly below 50, indicating a bearish momentum, and has reached oversold levels, below 30, recently. The Bollinger Bands show the price fluctuating within a narrowing range, suggesting increasing volatility and potential for a breakout. Given these factors, I recommend a short selling strategy. We will enter a short position at $0.104, coinciding with the support level and the beginning of the forecast period. A stop loss will be placed at $0.108 to protect against a potential rebound, and the initial target price will be $0.097, aligning with the forecast low. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI moves above 50 during the forecast period, we will adjust the target price to $0.101 and tighten the stop loss to $0.106. Conversely, if the price touches the upper Bollinger Band, indicating a potential short squeeze, we will immediately close the position and secure profits. This dynamic approach allows us to capitalize on the downtrend while mitigating risks associated with increased volatility. The final portfolio will be 100% short Dogecoin. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week projects further decreases. The support price is consistently at $0.284, acting as a floor, while the resistance has been at $0.339. The RSI consistently indicates oversold conditions, fluctuating between 28.3 and 45.3. Considering this, I recommend a short selling strategy. The entry price should be $0.299, coinciding with the recent price action and the downward trend. A stop loss should be set at $0.33, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The target price should be $0.261, aligned with the forecast and the continuation of the downtrend. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the bottom band, which suggests a potential bounce, but the overall trend is bearish. We'll use a combination of RSI and Bollinger Bands for confirmation. If the RSI falls below 30 and the price touches the lower Bollinger Band, we will enter a short position at $0.299. The stop loss remains at $0.33, and the target price is $0.261. This combined approach leverages both momentum and volatility indicators to enhance the probability of a successful trade. Based on the historical data and forecast, Bitcoin Cash has shown significant volatility with a recent downtrend. The RSI consistently dipped below 40, indicating oversold conditions, particularly on January 30th with a reading of 29.6. The forecast for the next week predicts a continued downward trend, with prices ranging from $536 to $504. Considering the support price of $507 and the recent oversold RSI readings, I recommend a long position entry at $507. To mitigate risk, set a stop-loss order at $497, just below the support level. For the target price, given the recent resistance at $545, aim for a profit of $545. This strategy leverages the potential for a bounce from the oversold condition and support level, while limiting losses with a conservative stop-loss. To further refine the strategy, we'll incorporate the Bollinger Bands. The price has been trading near the lower band for a while, confirming the oversold condition. A long entry at $507 aligns with the lower band and the support level. The stop-loss remains at $497 to protect against further downside. The target price of $545 is set based on the recent resistance level and the upper Bollinger Band, providing a reasonable profit target. This combined RSI and Bollinger Bands approach aims to capitalize on potential rebounds from oversold conditions while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a clear downtrend. The price has consistently declined from January 20th, 2026, to February 9th, 2026, with a significant drop followed by a gradual decrease. The RSI consistently remains below 50, indicating a bearish momentum, with values frequently dipping into the oversold territory below 30. The forecast data further reinforces this downtrend, predicting continued price declines. Therefore, a short selling strategy is recommended. We will implement a tiered short selling approach, capitalizing on the downward momentum. Our primary strategy will be based on the RSI and Bollinger Bands. When the RSI falls below 30, oversold, we will initiate a short position. For example, when the RSI on February 2, 2026, was 27.2, we will enter a short position at $2,540. The stop loss will be set slightly above the upper Bollinger Band to protect against unexpected reversals, for example, $2,610. The initial target price will be based on the support level, which is $2,450. If the price breaks through the support level, we will adjust the target price to $2,180 based on the forecast. This strategy combines the RSI's oversold signal with the Bollinger Band's volatility to maximize profit while managing risk. Based on the historical data and forecast, JasmyCoin shows a downtrend with recent price fluctuations. The RSI consistently hovers around the 30s and 40s, indicating a weak bullish momentum and potentially oversold conditions. The Bollinger Bands are contracting, suggesting decreasing volatility. Considering these factors, I propose a cautious long strategy with a focus on potential short-term rebounds. We will enter a long position at $0.00577, coinciding with the forecast price on February 9, 2026, and the lower Bollinger Band. A stop-loss order will be placed at $0.0055 to limit potential losses if the downtrend continues. The target price for this trade will be $0.0063, aiming to capture a potential bounce from the oversold condition and a move towards the middle Bollinger Band. This strategy combines the RSI oversold signal with the Bollinger Band support level for increased confirmation. The portfolio will be 60% allocated to this strategy, 20% to a conservative strategy waiting for a clear trend reversal, and 20% in cash to manage risk. This approach balances potential gains with prudent risk management, aligning with a high returns investment strategy while acknowledging the current market conditions. Based on the historical data and forecast, LayerZero shows a fluctuating trend with recent signs of weakening. The RSI consistently exceeded 80 in the past 2 weeks, indicating an overbought condition, suggesting a potential pullback. The forecast for the next week predicts a downtrend, further reinforcing this view. We will implement a short selling strategy, anticipating a price correction. Entry price will be $1.8. The stop loss will be set at $1.9, just above the recent resistance level, to limit potential losses if the price unexpectedly rises. The target price will be $1.7, aligning with the established support level. To further refine the strategy, we'll incorporate Bollinger Bands. The price has been consistently trading near the upper band, confirming the overbought condition. If the price breaks below the center of the Bollinger Bands, which is currently $1.88, it would signal a stronger bearish momentum. In this case, we will adjust the entry price to $1.87. The stop loss remains at $1.9, and the target price remains at $1.7. This combined RSI and Bollinger Bands approach aims to maximize potential returns while effectively managing risk. Based on the historical data and forecast, Bittensor has been in a downtrend, with a significant drop in price from January 20, 2026, to February 9, 2026. The RSI consistently indicates oversold conditions, with values frequently below 30, suggesting potential for a rebound. The Bollinger Bands also show that the price has been trading near the lower band for a considerable period, further supporting the possibility of a reversal. Considering these factors, I propose a contrarian strategy focused on capitalizing on a potential bounce. My recommended strategy is to enter a long position at $183, coinciding with the forecast price on February 9, 2026. Given the oversold RSI and proximity to the support level of $188, a stop loss should be placed just below the forecast price at $174 to limit potential losses. The target price will be $199, aligning with the forecast price on February 3, 2026. This strategy aims to capture a short-term upward movement while managing risk effectively. This approach combines technical indicators and forecast data to maximize potential returns while minimizing downside exposure. Based on the historical data and forecast, Render exhibits a downtrend. The price has been consistently approaching the support level of $1.33, and the forecast suggests continued downward pressure. The RSI consistently hovers below 50, with recent values dipping into oversold territory below 35, indicating potential for a short-term bounce, but not a trend reversal. The Bollinger Bands show a narrowing range, suggesting decreasing volatility and a potential breakout. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a short position. Entry price will be $1.58, capitalizing on the recent price decline. The stop loss will be set at $1.66, just above the recent high and the forecast price for February 3, 2026, to protect against a potential short-term bounce. The initial target price will be $1.46, aligning with the forecast for February 7, 2026, and a move towards the support level. If the price reaches $1.46, we will reevaluate the trend and consider adjusting the stop loss and target price accordingly. This combined approach balances risk and reward, aiming for high returns while managing potential losses. Based on the historical data and forecast, SUN token exhibits a downtrend. The RSI consistently dips below 50, indicating bearish momentum, and the forecast projects further declines. The support price of $0.0173 acts as a critical level. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for further downside. Therefore, I recommend a short selling strategy. We will initiate a short position at $0.0175. The stop loss will be set at $0.0185, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.0166, aligning with the forecast for February 9, 2026. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, oversold, we will consider covering the short position partially, securing some profit. Conversely, if the price breaks above the upper Bollinger Band, it signals a potential trend reversal, and we will fully cover the short position. The final portfolio will be a combination of the short selling strategy and the RSI/Bollinger Band signals, aiming for high returns while managing risk effectively. The final target price is $0.0166. Based on the historical data and forecast, Jupiter shows a mixed trend with periods of upward and downward movement. The support price consistently remains at $0.186, while the resistance fluctuates around $0.205. The RSI indicates that the asset is generally within the neutral range, occasionally dipping into oversold territory below 40. The Bollinger Bands show periods of contraction and expansion, suggesting varying levels of volatility. Given the forecast for the next week predicts a downward trend with prices ranging from $0.166 to $0.184, I recommend a short position strategy. My strategy involves entering a short position when the price touches the upper Bollinger Band. Specifically, enter a short position at $0.175. Place a stop-loss order slightly above the recent resistance level at $0.195 to limit potential losses if the price unexpectedly reverses. Set a target price at $0.166, which is the lowest forecast price for the next week. This strategy combines the Bollinger Band's volatility prediction with the RSI's oversold signal, aiming to capitalize on the anticipated downward trend while managing risk with a clearly defined stop-loss and target price. Based on the historical data and forecast, POL-X-Matic has been in a downtrend, with the price consistently approaching the support level of $0.102. The RSI indicates that the asset is currently oversold, fluctuating between 30.4 and 41.9. The Bollinger Bands show a contraction, suggesting increased volatility, with the price nearing the lower band. Considering these factors, I recommend a long position with an entry price of $0.104. A stop loss should be placed just below the support level at $0.101 to limit potential losses. The target price should be set near the resistance level of $0.118, aiming to capitalize on a potential bounce. To refine this strategy, we can incorporate the RSI and Bollinger Bands indicators. If the RSI crosses above 30 while the price is near the lower Bollinger Band, it can be a strong buy signal. For the forecast period, the price is expected to continue declining towards $0.102. Therefore, a conservative strategy would be to hold the long position until the price reaches $0.118, or until the RSI reaches 80, indicating an overbought condition. We can also set a trailing stop-loss near the upper Bollinger Band to secure profits as the price rises. This combined strategy, Prioritizing the support and resistance levels with RSI and Bollinger Bands confirmation offers a balanced approach to maximize potential returns while mitigating risks. Based on the historical data and forecast, Morpho shows a fluctuating trend with a recent dip, suggesting a potential for a rebound. The RSI consistently hovers around the mid-range, occasionally touching oversold levels below 40, indicating a possible entry point. Considering the support price of $1.17 and the forecast prices for the next week, I recommend a long position. Enter a long position at $1.13. Set a stop loss at $1.08 to mitigate potential losses if the price continues to decline. The initial target price should be $1.23, based on the resistance level and the recent price action. To refine this strategy, we will incorporate the Bollinger Bands. The price has been fluctuating around the middle band, indicating sideways movement. If the price breaks below the lower Bollinger Band, which is currently around $1.06, it signals an oversold condition, strengthening the case for a long position. If the price reaches the upper Bollinger Band, around $1.4, it suggests an overbought condition, prompting a partial profit taking and adjusting the target price to $1.27. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on potential rebounds while managing risk effectively. Based on the historical data and forecast, Stacks demonstrates a downtrend with increasing volatility. The RSI consistently fluctuates around the midpoint, indicating indecision in the market. However, the recent dip in RSI values suggests a potential oversold condition, especially on January 28 and February 2, with values of 34.2 and 32.4 respectively. Considering the forecast for the next week, the price is predicted to continue its downward trend, with a low of $0.258. Therefore, I recommend a contrarian strategy, anticipating a short-term bounce after reaching an oversold level. My strategy involves a long position entry at $0.258, coinciding with the predicted low for February 9, 2026. The stop loss will be set at $0.241, just below the recent bottom of the Bollinger Bands, to limit potential losses. The target price is set at $0.271, aligning with the forecast price for February 5, 2026, and also near the middle of the Bollinger Bands. This strategy aims to capitalize on a potential rebound from the oversold condition, while mitigating risk with a conservative stop loss and a realistic target price. This approach combines RSI oversold signals with Bollinger Band support and forecast data for a balanced and potentially high-return investment. Based on the historical data and forecast, Kaia shows a volatile trend with periods of consolidation and upward movement. The RSI consistently dips below the oversold level of 20, indicating potential buying opportunities. The Bollinger Bands have been widening, suggesting increased volatility and potential for price breakouts. The forecast for the next week predicts a fluctuating price, with some days showing slight increases. Considering these factors, I recommend a combined strategy focusing on short-term gains with defined risk management. My recommended strategy is to initiate a long position at $0.0594, coinciding with a dip in the RSI and the price nearing the support level of $0.0604. Place a stop-loss order at $0.0542, just below the recent low, to limit potential losses. Set a target price at $0.0662, aligning with the resistance level and a reasonable profit margin. If the price hits the target, consider taking profits and waiting for a pullback to re-enter the market. This strategy combines RSI and Bollinger Band signals with support and resistance levels to maximize potential returns while managing risk effectively.